Hi, Phil Iverson here in Chicago. This video is about self-employed tax preparation, tax returns for the self-employed. These days there are so many gig workers, small business owners, people getting paid on 1099s. It is a special class of tax return, and the general form that is used is a Schedule C to report your income, as well as the list of expenses that you have to offset against that income. Now, for the last few years, there has been a 20% exclusion from income for the self-employed. That is a giant deduction. I've been doing this kind of work for a very long time, and there's never been quite as juicy a deduction as that 20% exclusion. So that's a good thing about being self-employed. However, you are required to pay all of your own taxes when you're self-employed, and usually that comes via estimated taxes 4 times a year. I have clients that they don't even want to get bothered with it, so they pay one voucher and pay the whole thing. But the standard way to go is every 3 months. Now, the taxes do get rather hefty, rather pricey. Here in Illinois, it's about 5% for the state. Your self-employed tax, Social Security, that's a little bit of a calculation there, but it's 12 to 15%. So that's a flat 17, state and Social Security, plus whatever federal tax, regular income tax. So that can easily start at about 1/3 of your money going to tax. So that's something to keep in mind. Now, the first $10,000, for a single person, the first $10,000 of income, there is no federal tax. So it would just be state at roughly 5% and Social Security. But for every increment of $10,000 to $15,000 above that $10,000, the tax brackets start going up. So these are some of the considerations, to think about as a self-employed person. Now, you are allowed to deduct anything, pretty much anything that is business related that you had to spend, any monies you had to spend in order to earn your income from your self-employment. So if we were to take a videographer or a photographer, that might include his travel to and from various camera shooting sites. There could be a standard mileage rate, possibly depreciation and actual expenses on his car. It could be his airfare travel. It could be his bus fare. So these are some of the transportation costs. And as well, you may have an office in the home. It is common now, especially nowadays, for people to work at home and to use one room or one area regularly and exclusively for that work. So you do have a possible expense item for that, and that would be part of the rent or part of your mortgage, your taxes, condo fees. You could depreciate some of the property expense as well. Those right there are a few really important items for many self-employed people. There is a Section 179 on the depreciation form, and that section is really, it accelerates. It allows you to deduct essentially all of the cost of some rather pricey pieces of equipment and the like all at once in the year it's purchased. For example, a photographer may buy a camera, and that camera will, probably work three to 5 years. And under regular depreciation, you divide the cost of the camera over the life of the camera. But with the accelerated depreciation, you can grab some of that expense all at one time. Now, I try to keep these videos as simple to understand as possible, not using a lot of technical jargon, but these are some of the items that come up when doing an interview about a tax return, and some of the things you should really think about, because you want to try to draw as many expenses that you properly have coming and put them out on a piece of paper, so that when you do your tax return, your income will go down, as well as the tax bite. So anyway, hope the video's been informative. Again, Phil Iverson here in Chicago. Hope your businesses are all doing well.